This is Matthew Cratter from Trader University, and today I want to talk about how Bitcoin is coming to U.S. retirement accounts. We just got the news that Fidelity is going to allow retirement savers who have 401ks with their companies to put Bitcoin into it. This is really huge news, and it's part of a bigger move of people moving their retirement savings into Bitcoin. But I wanted to cover this story in particular this morning. For those of you outside the U.S., 401k is just an employer-sponsored investment account or investment plan that you get when you, hopefully from your employer, and it's used for retirement savings. When you contribute to it, that's a tax deductible event most of the time. And then you have a nice feature where an employer will often match employee contributions. So the employee gets that tax benefit and also can get some matching funds. And then it's up to the employer to offer and decide on the general selection of what the employee can invest in. It's usually a mixture of funds, mutual funds, other funds that range from very conservative like U.S. Treasury funds and other bond funds to stock index funds, and maybe growth stock funds would be the most aggressive option. And now Bitcoin is going to be added to that mix thanks to Fidelity. Here's their official announcement on Business Wire, which I'll link to. I think the relevant paragraph is this one. The new proprietary offering will enable employees who are comfortable with the risks and volatility of cryptocurrency. They say cryptocurrency, but for now only Bitcoin is being offered. To invest in Bitcoin through a digital assets account, that's a DAA. It's a custom plan account that holds Bitcoin and short-term money market investments to provide the liquidity needed for the account to facilitate daily transactions. So there'll always be a little cash buffer, and you'll be able to, it looks like you'll be able to adjust that mix of cash and Bitcoin inside the DAA. And then this announcement finishes by saying Bitcoin in the DAA will be held on the Fidelity Digital Assets Custody platform to ensure institutional grade security. This is one of the downsides of it. You won't get to hold your own keys. You will have to trust Fidelity as your custodian to hold your Bitcoin. Nevertheless, I think we shouldn't let the perfect be the enemy of the good. This is a very good move towards allowing people to save in Bitcoin. And it looks like that as part of this, Fidelity will allow you as an employee, if your employer has a Fidelity plan, to put up to 20% of your funds into this Bitcoin product. It'll be up to the employer to fine tune this. So if your employer only wants you to be able to put 10%, that will be the cap. But if they don't have a cap, it'll be a 20%. A 20% cap. Now, for those of you who aren't aware of how large 401ks are, here's a number from the middle of last year, from June of 2021. At that point, 401k plans in the U.S. held an estimated $7.3 trillion. So it's $7.3 trillion worth of assets. So that's probably gone down with the stock market drawdown and the bond market drawdown. But we're still talking trillions and trillions of dollars. So if you do a thought experiment, if you say there's 7.3 trillion in assets in these 401ks in the US, what happens if just 10% is allocated to Bitcoin? Not 20%, which is the maximum they'd allow. Obviously, all of these 401k assets are not with Fidelity, but we're assuming here that the competitors to Fidelity are forced as part of this competition to roll out their own similar products. So let's assume that just 10% of that retirement money makes its way into Bitcoin. That's $730 billion worth of Bitcoin. And that's a significant number because that's approximately what the current market cap is right now. So if all this money found its way into Bitcoin, you would end up much more than doubling. The way these things work is it's the marginal dollars that set the price. And so you'd probably get much more than a double. And this is just money coming out of 401ks and being invested in Bitcoin. So this is quite significant. This is part of the wall of money coming towards Bitcoin that we've been talking about for the past 18 months. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Hit the notification bell as well if you want to be notified when I publish my next video. So of course this is good news, but we have to have someone come and put a fly in our soup, and that is the Labor Department. The all holy Labor Department is criticizing this plan, saying that they have grave concerns. Whenever I hear Labor Department, I always think of some sort of Soviet-style department. here's the link where they criticize this move. This is an article. This is a blog post by Ali Kawar at the U.S. Department of Labor, talking about how Bitcoin is just too volatile to put in a retirement account. Of course, this is ridiculous. We know how volatile stocks are. We know how volatile bonds have been this year. This is a fake concern, and this is brought to you by the same Labor Department that is responsible for the BLS, the Bureau of Labor Statistics, that releases the fake CPI number every month. So this is not a group that's necessarily concerned with the truth. They're an arm of the government, and they also don't seem to have a problem with people holding U.S. Treasuries in their retirement accounts. U.S. Treasuries have performed terribly for the past few years, and they've really performed terribly for the past 20 years, I'd say, on an inflation-adjusted basis. These are securities that are designed to lose you purchasing power, but it's funny because Ali Kawar doesn't have a problem with retirees purchasing U.S. Treasuries, but he has a problem with retirees purchasing Bitcoin, which would actually preserve their purchasing power. So that's the one wrinkle there. We'll see if this is, it looks like that it's still going to be rolled out, at least as of now. And it looks like one of the first companies that's going to be involved in offering this option to their employees is MicroStrategy under Michael Saylor, of course, one of the largest corporate holders of Bitcoin in the world. So this is very exciting. As we said, it's not your keys, not your coins. They're going to use their own custody platform to hold your Bitcoin. So it's not ideal. But again, it's a good start. I would encourage Fidelity, if you're listening, to allow your clients to hold their own private keys at a certain point. I know this is complicated under U.S. retirement law, and there's a lot of paperwork involved here. And then you have people like Ali trying to get you to buy garbage instead. But I think this is a really good first start, and it really gives you an inkling of where the money is going to come from. Again, they're not offering XRP or Cardano or any garbage like this inside the retirement accounts. And I think Bitcoin is it should be the basis of everyone's retirement. Again, that's not investment advice. That's my own personal opinion. But it's one of the few assets out there that can really stay ahead of inflation and maintain your purchasing power. And this is why I believe that most of the world's savings, including sovereign savings, central bank savings, trade surplus savings, corporate savings, individual savings, most of the world's savings will eventually find a home in Bitcoin. And what we're seeing here with Fidelity is a very good example of a first step. I wanted to link to this article. I believe it's still relevant. This is, this video by Vulcan Trader I've linked to in the past. If you have a self-directed IRA, here's one way to get Bitcoin into it. I also wanted to link to Kingdom Trust. I've never used them. This is the Choice app brought to you by Kingdom Trust. I've never used them, but I've heard good things about them from viewers of this channel, and they do allow you to a way to put Bitcoin into your own self-directed retirement account. So one thing with a 401k, after you leave your employer, you can often roll it into a self-directed IRA, and you could continue to invest in Bitcoin. And the last time I checked, I believe Kingdom Trust does allow you to hold your own keys. So again, this is not an option for 401ks until you've left your employer, but this is something to think about for those of you with self-directed IRAs. I'm not going to be around this weekend, so no video on Saturday or Sunday, but keep hodling on, keep dollar cost averaging into Bitcoin if you've done your research and you believe in it as much as I do. And most importantly, if you're holding Bitcoin on an exchange, the wheels are coming off of the system. Please use this weekend time, use your free time to learn how to use Bitcoin in a self-sovereign manner. Buy a Trezor or Cold Card, buy some sort of hardware wallet, get your Bitcoin off the exchanges before it's too late. Get your Bitcoin off the exchanges while you still can. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.